Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this Monday, the 19th of June, 2017. We're just after 3:20 p.m. Central Daylight Time. An interesting Monday. We walk into a stronger dollar, lower currencies. Okay, that bust the gold market. Down nearly, by the close it was down about $10 or so. Bonds and notes down, and as you can see, near their lows. The energy market still very depressed to, again, break lows in this market. We saw the GLD stay with the futures and drop, but the stock indexes, as a group, the indices, came alive. And all of a sudden, they have new life in them. In fact, contract high life with the Dow and the S&P just running to new highs. So as we go to this chart, the question is, number one, of course, why? And there's talk that Paul Ryan's going to talk tomorrow about moving the tax reform bill right to the forefront. I don't think that, frankly, the White House can get much done on the health. I think they've got to, and they're going to really concentrate on tax reform to see if they can get anything done there. Remember, nothing the president has done trying to get it through both houses other than time-to-time credit, lifting the debt ceiling. That's about it. He's really not getting any programs through. Very, very problematic for him. But as we take a look, the market's a ray of hope comes on up, and with this settlement today at 21,460, well, that on a weekly bar chart, number one, a new high. Number two, that'll be at least the highest close so far, right? And you see that when you come to a daily area chart of closes, that is the highest since mid-May when we had that break to 20,548, and the market, again, each break gets bought, and away you go. And you feel at the end of the day, if you didn't buy it, stupid. And if you go back to when this occurred, I think that I said, people are buying it, they're closing their eyes, and they're just hoping that the market will rebound and keep going as it has on each of these breaks. Got it? Now, back here, if you bought that break and they weren't very deep, it did work lower. But since April, this is what it's done. And you can see on the bar chart how the market just keeps moving up and away. When you put on the swing lines, which is my proprietary study so that I can see break lows, rally highs, what the trend is of a market. If you believe in an uptrend, the definition's higher highs, plural, higher lows, plural. Well, here's your lows, is marked by the apex, and there's your highs. Got it. I filter it with the 18-day moving average of closes and like to often see other moving averages. One of them is the 100-day, but there are others that I use besides that. Then I look to see is the market hitting that number. Well, in all honesty, since this break in mid-May, you have not come back once to hit the 18-day moving average of closes. That tells me to look above the market. Where could resistance be? And let me get to it this way. And the resistance is the upper Bollinger Band in this case of 21,440. Now, if you settle like this, which we know you will, you're going to have your first day over that upper Bollinger Band. Now, the beauty of these bands is that 95% of the time the market will settle within them. And yes, you can exceed them in that other 5%, but you can also count the most amount of days in a row that you stay out of them and get to norms. That doesn't mean you can't run into some situation in the world that breaks all the norms. But I look for norms. That's the only way that I know to look for things. And the norm says that you are now ahead of yourself. And if you look at momentum, even though you're ahead of yourself, as long as this market stays embedded, and embedded means it's converted itself from getting into an overbought area to locking in sideways action. Years ago, I came up with the idea that markets just don't stay overbought for long periods of time. There's got to be another meaning to it. And that meaning is, I think, when you get both the numbers that make up the slow stochastic, and they're both over 80 for 3 days, 4 days or more, what you have is it's locked in a trend. That trend is lost when the red line closes back under 80. I have other rules that say it has to come back off that the next day, otherwise it's really lost. Well, it's lost in this case. No, it's embedded, okay? And as long as that happens, the breaks in the market continue to be gobbled up, and the market tries to drive to new highs. It's exactly what my theory is. When we look at the NASDAQ, the last rally high in this market was 57.89. Today you got up to 57.8250. If you take out 57.89, you'll have a period of a higher high, but you'll have, if we look at this low right here, that's 56.41 and a quarter, and this low was 56.43 and a quarter. Therefore, you'll have a pattern of a lower low and a higher high. Still no trend, and the resistance is 57.94. In other words, this market right now has no reason to suddenly start trending. That'll be very, very difficult. Doesn't mean it can't go higher, but not in what I define as a trend. In the S&P, you're up to the upper Bollinger Band. You're overbought. You're at a new all-time high. This is the resistance point. At least you have a measurable one. Could the market go higher? Of course it could go higher, but if you look at it today, you settled under that number after hitting the top number. Therefore, it's still within the realm, but an overbought market. Could we get the classic Monday highs, Tuesday break lows? It could be. In other words, Tuesday reversals. Could be. And that's a pattern that we see often in markets. Excuse me. When I come to the Russell, we're overbought. The market has a trend of down, lower highs, lower lows, countered by the fact that momentum, because you're over the 18-day average, is saying you're looking for bullish conditions to get involved in. You're not getting them. It's a neutral market as well. In the VIX, look where you come back to, that 18-day average, and you're just sitting there. Remember what I told you as these black bands narrowed in from this big up move? Look for them to just start doing that, the sideways action. It's exactly where you're at. This was the shot for the breakout, and it was a total failure on the chart. Came back to embedding. You lost it, went back to the 18-day average, and ever since then, you're still fighting with the 100-day average in the upper Bollinger Band, keeping the market, if you would, in a sideways pattern. In the bond market, should we take out this low of 155.5 tomorrow, be careful. It could set up a pattern, lower highs, lower lows in an overbought condition, might cause the market to drop a little bit there. We already have a pattern similar to that in the 10-year, but an outside day down. Lower highs, lower lows. The market went down to the 18-day average of closes and basically held that number today. Okay, but that's all it did. So you've got the swing line down, the bias up because you're over that 18-day average, but momentum pointing down. You're not in, you don't have a market that's all three elements in there for a trend. Dollar index today, higher lows, higher highs, back into an uptrend. Warning sign. You're overbought. When you came down to the lower Bollinger Band, you couldn't go anywhere. Now you went back up to it. The odds favor it's not going to go anywhere. If it can close over that number, is that the beginning of the run of the dollar to the upside? Tomorrow's going to be an important day. The odds still favor it's not going to happen, where it's not going to be able to close over that number. Let's see what it does. If the dollar's going to run to the upside, guess which market's going to start closing under this lower Bollinger Band and pointing down? You got it, this market. So I'll be looking hard to see what this market does tomorrow. Is it going to set up lower highs, lower lows? Any way you go about it, you're going to be in an oversold condition, and the dollar's going to be in an overbought condition, but it could be the beginning of trends. In the British pound, this could be where the market tries to resume its downtrend. Something common here. Since mid-June, we're only at the 21st, I say mid. Let's call it since the beginning of June, where the market finally got back under that 18-day average. The rallies have faltered all the way through. The key now for this market is it's going to set up lower highs with today's action. In order to be bearish, you got to start making a pattern of lower lows. Hasn't done it. So you got a higher lows, lower highs under the 18-day average in a pattern that any lower opening will put it oversold. These numbers will get under 30 very, very fast. So it's difficult right here. They began their Brexit talks today. We have to see where that carries. Japanese yen fell back now to the 100-day moving average of closes in an oversold condition. So first level of support right here. I think the pros are taking money if they're short off the market. Secondary right here. I don't see legs to this to the downside via this current formation that you've got. Either you embed or something else has to happen. Crude oil chart looking sicko. Lower highs, lower lows, outside day down. Take out today's highs, maybe that'd be a sign of the market running out of downside momentum. Don't take it out, and why can't you go to the lower Bollinger Band here, which is going to be a lot lower than it's at right now, be in the 4,300 zone, just so you get an idea. Gasoline market, big failure today, still an embedded reading, lower highs, that's the red arrows, lower lows. Take out today's lows, this arrow is going to move down to this number here. Are we going back to 139.35? Well, the market's setting you up to take a look, a hard look, and ask yourself this. What if, just plain, what if we are looking at another API number that's disappointing and or an EIA number tomorrow? Bigger builds, problems for the market. Natural gas, you now have run into the seasonal time where we get some weakness into July. Be careful. That goes back, if you look at the more research studies and the like, the patterns, lower highs, lower lows. Admittedly, you had come here, and I'll show you this. You lost the embedded reading on Thursday, didn't gain it back on Friday. Mark it up like that. And today you start crashing. Both numbers get back under 20. Doesn't matter. You're just oversold in a downtrend. If it carries down, you might be going to the 285 level in this market. So, interesting time for us all. Be ready for that. And we're going to be writing about it at Linn & Associates. Now, what we do is we have a staff of writers throughout our company. Be it custom weather reports for the grains. You know, just now we got crop conditions, and you'll see they deteriorated more than people thought. That'll be interesting for tomorrow's trade. Our staff will have you all prepared for it tonight. You're not going to read about it in the morning to see what it is. And that's the advantage to firms like us. We are a boutique. We are a throwback to people that are looking to talk to brokers, that do field research, that not only do the grains, but it's other markets one after the other, and try to come up with trade ideas that help you out. Admittedly, you can go to a discount broker, and there's plenty of them that trade near nothing. Of course, you get near nothing from most of them. You don't get the research. Great platforms and that on. They'll give you the tools to make your own decisions. But a lot of people want help with that decision, and with that they want research, they want reasons. We might be in that mix for you. If you think we could be, I want to give you a free offer to try our research if you haven't tried it before. All you have to do is give us a call, and we're going to put you on for a full month of this. 866-973-2077. You can go to our website, sign up for it as well. You'll see a carousel of free offers. You can click right up here, and you will see right from there. When you click at the icon that'll be up on YouTube if you're watching me from there, or underneath us on many websites, it says click here for Ira's free offers. I'm Ira. You have a great day, and I'll see you tomorrow.